Let's connect with Chakri Lokapriya as well, who's joining in on the show. Chakri, hi there, good morning. Lots to start off and discuss, but let's begin with your views on ITC, the demerger fine print, and how you've looked at the numbers.
Good morning. I think, as I always say, that the devil is in the details. So, in this case, the tax implications of the demerger will play a key role in determining the subsequent valuation of the business. And this is a business which the hotel business, which is a cash flow intensive, capex intensive business, and them moving to an asset light model is a more a future tense kind of a thing. But how do they service that? So I would still wait before taking the leap into it, given that it's already done so phenomenally well.
Chakri, you just heard the commentary on Interglobe. Just wanted to understand where is it that you stand in terms of an investment view on the stock?
From an investment view, it has all the ingredients like, fantastic market share, the execution is good, not too much price competition, but it's still subject to the global vagaries of oil and lease prices. So those two variables it does not control. And pricing has always been a big issue in India, airline pricing, that is, ticket pricing, and which they don't have actually that much control over, subject to rate. So given all this, I think these are good positional investments, but not long-term buy and forget kind of stocks.
Agree. Why are banks selling off? I mean, they are the go-to sector. Everybody likes them. Everybody owns them. Numbers are strong, but suddenly banks are getting whacked.
Yes, good question. So, as we went into this quarter, it was kind of expected that the net interest margins will actually be slightly lower, and that actually happened. In some cases, like for example, City Union Bank 2 days ago, the slippages were actually a bit higher than expected. So as a result of that, the stock got punished really a lot, even though it wasn't an expensive stock. And this has been, and a few days ago, when Bank of India reported good numbers, their provisionings were strong. The net interest margins, while trended down, still was in line with expectations. So I think these are the two examples of what's happened to banks in a sense, is wherever you saw some banks slippages coming down, slippages increasing, they were punished more. Net interest margins are down across board. The stocks have run up, but the valuations are still okay. So, but because of all the downgrades that's happening in the US, so there will be some amount of pause on what will be the cost of capital for Indian banks if the RBI is forced to raise rates as a result of what's happening in the US.
All right. Meantime, some of the other stocks as well that we will be keeping on our radar include the likes of an Infosys. We discussed it earlier today, and JP Morgan as well, talking about that large deal adding about 70 to 90 basis points to the FY25 growth. Just wanted to get in your thoughts then, Chakri, on the kind of deal win momentum that we're seeing and what this spells out as a strategy for the IT sector as a whole.
Now, Infosys deal win momentum, last two deals, the one latest and one a couple of weeks ago, clearly, reduces some concerns about Infosys in particular, because, their numbers were hurt most when they reported the earnings releases. Second, now with the continuous bank downgrades in the US, banks being, 25 to 30% of an IT services company's revenue basket, there is going to be some amount of pause as a result in discretionary spending of IT services. As a result of that, there is unlikely to be any positive surprises in terms of the order book. So IT services as a sector is, unlikely to be re-rated anytime until the dust settles on the US banks front.
I wanted to understand, Chakri, from you as to whether or not you actually see the tide turning for a PVR Inox. No doubt it was a pretty stellar weekend, and there have been impressive releases as well. Does this change the stance on the stock that has otherwise been through the grind, to put it mildly?
In the recent past, in the last couple of months, there have been some very big blockbuster movies, both English and as well as domestic names, which have done well. And that, PVR today is the de facto chain, because the only large chain left in the country today, and they have a disproportionate market share. And so they'll directly benefit. So in the short term, in this quarter, because of the current blockbuster releases, which have happened. Now, this next as we're going into the most important Diwali, post-Diwali season, when you'll have again a bunch of big releases. So, and valuations are still okay. You can see that their F&B has actually come down, which is not so good news on the margins. So I think therefore the stock will trade on slightly lower multiples.
Okay. Meantime, just wanted to also get in your thoughts, Chakri, as to how you've read into Nykaa's financials and whether or not you believe that, you know, a bit of the pain is now behind us or is only going to continue for Nykaa.
See, in the case of Nykaa, their gross revenue, that number grew. But on the other hand, their fashion revenue was quite weak. The fashion revenue weakness is clearly because of competition. And so it shows that they're having a tough time in pricing their products. There is no pricing power in other words. So against this backdrop, so which means the cash flow generation or their net debt change in the company that was expected is unlikely to improve anytime in the next quarter or two. Given that, I think Nykaa is still we'll have to wait and see until the time the margins show an uptick.
That's the other stock which is in focus. And over the weekend at this mega event of theirs in South Africa, they've unveiled a new brand identity for their EV segment, and they've launched 7 lightweight tractors as well. Chakri, after PVs, they're clearly beefing up the farm equipment division, right, and that segment. And clearly 7 new launches now in tractors itself. Just wanted to understand, how much more do you think the stock can move from this 1500 plus level, which it's already at?
The good thing about M&M in terms of being a sum of parts story is, depending on the day, the story changes. And here, in this case, the good news is, being one of the largest, they're probably the second or third largest tractor company in the world. And, they sell to many countries, many important markets, including to the US. And selling into the US, the tractor is a very difficult task, given it's a very different farm requirements than from other countries like India. The fact that they've done well and the traction there is improving, and this being one of their main businesses originally, places M&M well. So the news flow momentum and therefore the order momentum for the tractor business is going to be strong, and therefore I think M&M still looks good, despite I was thinking that the sum of the parts has played off kind of a thing, but I think M&M does well even based on the current news flow.
Right, Chakri, great to have you on the show. Thanks as always for taking the time out. Since we're talking